I think coming back to your point of like what lights you up is like for people making the decision whether they're going to stick with residential or move into commercial. That's a really big factor of like what excites you and how can you have more fun investing in your property portfolio in the way that you do like. For example, if you love buying land with a house and subdividing and doing that in residential and you can do that really well, great. Or if you just like buying lots of units, but stick with that. If you love that game, you can continue doing it. Or if you just want a different challenge or something a little bit different, then you can move to commercial as well. So it doesn't need to be just about the cash flow or the capital growth and how you just build your portfolio based on building wealth. It can be about enjoying the journey too.
Yeah, well, I mean, I could rattle. Like, there's a strategy. There's a guy on the Gold Coast who here's a niche, and he finds units in good spots where high rise is going up around it. So it's a lot of marketing to that area. He basically buys established older properties and then does a full gut job, renovates it, sells it within 3 months, and he makes a couple $100,000 a year. Just keeps flipping properties, and he's got his.
What's his name? Because I met somebody like 5 years ago.
I don't know if he wants me to tell the story.
So he's got a brand that like people know.
No, he just always own cash, right?
Is it a couple?
No.
Okay, yeah, sweet, different people then.
Yeah, but and then there's the Airbnbs of the world, which I challenge once again. Byron Bay just released that there is a maximum of 60 days per year that you can rent out your property on a short-term accommodation stay.
Whoa!
So that whole Airbnb strategy that a lot of people have been pushing the last few years, and is why I've never pushed it, is because there's just so many complexities with that. When a new cash flow stream in property comes out, you just got to be cautious. I like to sit on the sidelines and wait for a few things to evolve. And
I have heard of somebody in the Byron Bay area buy like 10 to 15 or 20 properties just for Airbnb in that area, and to be all in on that without the diversification, like that could be a move to go, well, do I need some commercial properties in Byron Bay? Like buy some of those big warehouses that like Stone and Wood and all these, new fancy la-di-da breweries are going into, pull some cash off the table from them guys.
I mean, you've got assets in Byron Bay. It's not a bad thing. Hopefully, he's got a lot of growth. It's going nuts lately, and you just put a tenant in there. The whole is we are undersupplied, and they're trying to figure out ways that have an immediate impact to help people have housing. And
it's smart for the local government to do it that way.
Yeah, it's a good thing too.
It'll slow down the growth of Byron Bay with less tourism. Don't you reckon?
Yeah, it's a good point. I don't know. There's still a lot of hotels.
Or it could slow down the growth of tourism, but it could increase because it could increase the property prices for homeowners there.
Yeah, or it could decrease because it's been overinflated because everyone's been buying 10 to 15 Airbnbs in Byron Bay.
Yeah. And everybody's sick of paying like $500 a day in parking.
Yeah, no, go for a surf. And I have to pay to go for a surf now.
Woo. Yeah, take the fun out of it.
But yeah, that's another key point is diversify. I mean, if you've got a strategy, it's great. But like, I wouldn't just sit on one. And that's like, if you're just pure Airbnb plays, now, have that mind and always be challenged your thought process. And like the residential space is always safe because you need houses, right? Will there be changes in the future where the government start, they're taxing you for, like, investors obviously have a higher cost of holding than owner occupiers. They have to pay high rates, they have landlord insurance, etc. You've got to have a go, and you've got to be doing something with your money. Otherwise, you're fighting. If you're just constantly saving your way to retirement, then you're fighting inflation, which is going up. They say 2 to 3% per year is the target, but if you take into account true inflation, it runs around 7 to 8. You're actually going backwards, and it's a harder path to save your way to financial freedom than it is to invest in smarter assets.
It's a really good way. It's a really good mindset to have of like fighting inflation versus putting inflation on your side. Because when you go from having cash to investing in assets like property that grow with inflation and the economy,
and you're fixing your debt in the past odds was actually the opposite effect. So that cost of the debt is getting cheaper by you doing nothing.
Absolutely.